Good morning, traders. Today is Sunday, November 6th, 2022. Does anyone want to go cliff diving? Of course, I mean stock markets. What you are looking at is the MACD monthly view comparing the dot-com bubble to today, which I coined the everything bubble. Okay, you've probably seen that also on the internet, but you will see, I will show you why it really is the everything bubble. But what you're looking at right on your screen is hiding in plain sight as to where we are today and where we are going. All right. To the far right, you will see that we are currently on the monthly MACD. This is for NASDAQ. What you're looking at is negative 154. I believe we're going to negative 909 as the true bottom. Okay. And we will get into that momentarily. But before we do that, let me show you by comparison so you can really see on a relative accurate scale. Okay, this is the dot-com the dot-com bear market that lasted 2 years. Look at that. This is NASDAQ. This is the monthly MACD. Let me zoom in. So you get the relative size. There is no comparison at all. I would say the only comparison you can make is to 1929, the Great Depression, the great stock market crash. That is the only other comparison that might rival this one that we are in right now for first place or the gold medal. Okay, look at that MACD. We are only just now crossing the zero path. We are at the negative 154 mark right now on the MACD monthly. See that right there? How far down can it go? There's no signs that it's even trying to curl up. Okay, so you get that visual? Let's compare that to Dow Jones. Surprisingly, Dow Jones is still in the positive. It hasn't crossed through the negative yet, but look what it's doing here. It is curling down now. Okay, now I want to call your attention to, everyone knows that Dow Jones has been going up. It's a head fake, guys. See that? It's going up, but MACD is going down. It's a head fake. Don't bite down on the Dow Jones rally. Everyone's like, oh, Dow Jones is up, even on last Friday. Dow Jones is up 1.26%. But the MACD is not going up with you, so I guarantee you it's going down. Now, I want to call your attention to something. This is very unique. You don't see this pattern on the NASDAQ. Look at, okay, here we go. Here's the dot-com, right? Dot-com bubble crashed down all the way to 2000. Actually, Dow Jones MACD kept going past NASDAQ. But anyways, my point here is lower low. And the lower low is the 2008 financial crisis. Then what in the world happened? How did we reverse course, right? And how did we reverse course and go from that and abruptly to that? It's called quantitative easing, guys. QE. We all know what that did. That artificially inflated the markets. So actually what was happening is, and the market makers knew this, as of 2008, right? We all remember Ben Bernanke, Hank Paulson, Timothy Geithner, right? All those guys. 2008, right here. This is the nexus, right here. The nexus, the genesis, the birth of quantitative easing. right? It was. It was the birth of it. But guess what? Jay Powell is now, oh, I guess you can call him the Reaper. He's reversing. He is undoing what started in the 2008 Great Financial Crisis, Global Financial Crisis, GFC. He is undoing it. As you know, um, he is reducing on a weekly basis or a monthly basis the mortgage-backed securities and bond purchases, and MBS, and he's also increasing interest rates. He is undoing what has been done all of these years since 2009, 2008. And that's why you see now the Dow, I just drew this trend line on the MACD, and now it's curling back down. Okay, this is the monthly view. Skip on over to the S&P 500. S&P 500, same way. Lower lows. Deep down, central bankers, central planners, they knew, they knew, oh no, this was all going to go down in a house. Here, let me draw this line. Oops. Draw that. They knew what was coming. And what was their plan in 2008? Everybody knows. They bailed out the banks. Of course. See that? How can you deny what was about to happen to the economy? It was about to completely collapse. Look at the MACD monthly on this. Lower lows, lower highs, and yet it reversed course. And now we're all the way up here. But maybe not so much anymore. And now we are right here. Okay? We have a long ways to go until the bottom, guys. All right? So, that's the monthly on the S&P, the Dow, and the NASDAQ. So, relative size, once again, no comparison. No comparison even between the dot-com bubble, technology, and the everything bubble. Okay? It is all being undone. Now the MACD, even on NASDAQ, NASDAQ has benefited significantly from all the quantitative easing, right? The tech bubbles. Let's be even just conservative. Look at the MACD. It just broke that trend line. That's held. I'm even being conservative how I'm drawing that line. You know what I mean? I can make that line go up here, be like that. But I'll just give him a benefit of the doubt there. Oh yeah. Okay. So before I get into my prediction of August 5th, 2024 as the bottom, and I'm going to show you how I came to that conclusion. Let me show you, go to the weekly view of the .com. Let me clear all drawings here we go. I want to show you guys something. Have you guys seen this chart? It is, Wall Street psychology of a market cycle, which I believe we are right around here-ish, something like that. Okay, we've got a big drop to come. I think that drop, the initial big drop, is going to stop right around March. And let me show you why in a second, but that's what I think it is. This chart, this Wall Street Journal market cycle chart, guess where they got it from? Look to your right. Let me zoom out a little bit so you can. That's the .com chart. See that? That's the .com chart. That's where they got it from. Okay? And I believe the .com chart is a smaller replica of the everything bubble that we're in today. Let me show you another chart. Look at that. In green is superimposed. That is in green. The green shaded area is the .com bubble. In the background is NASDAQ today, the weekly view. Doesn't that look eerily similar when you superimpose? Okay. I think we are going to, we are going to have that flash crash in March-ish, 2023, right here. It is coming, but then we're going to have that inevitable aftershock where it's like tremors after the earthquake, right? Everyone has the aftershock. This flash crash is not the bottom, it is a bottom. The bottom will be after the aftershock phase carries itself out. And that's where I think it's going to be around August 2024. Now, I will say, on the assumption that the Fed doesn't turn the money printers back on, right? Drop interest rates back to zero and effectively force a V-shape move, just like this is exactly what they did right here. This is COVID pandemic. Instantly, overnight, boop, interest rates to zero, turn the money printers back on, let's rock and roll. And on top of that, not only just turn the money printers back on, we're going to buy $5 trillion over the next 5 years of mortgage-backed securities, right? Bonds, asset purchases. Okay, that would be obviously a mitigating. That would speed up the timeline from August 2024 to, well, I think it could be significantly less. Tough to say, but when it's more of a V shape, that's almost, within 1 or 2 months of a recovery. Not, you basically bypass the aftershock phase. Okay, so let's get into it. Let's get into how I came up with August 2024. Now, we're going to take these quadrants in turn. Let's first go over to, this is the .com weekly. So earlier I showed you the NASDAQ, Dow Jones, and S&P 500 monthly, right? You saw that huge drop, those huge drops in the MACD. This is the weekly instead. I wanted to be a little bit more granular than monthly, so I chose to go weekly. But the idea is the same. Basically, on the .com, during the 2000s, the peak of the MACD was at 491. The trough, the bottom, was negative 395. The absolute value of that is 886. So that's 886 points between the top and the bottom. Okay, pretty self-explanatory there. Before I jump over to today, this is still the .com weekly, and here is the bottom of the MACD, which right here down in the lower left-hand corner, that coincides with this negative 395 number a moment ago. Okay, that's the bottom of the MACD on the .com crash. So this is the bottom of the MACD. The MACD bottoms before the stock market bottoms. Okay, that's important to know that, like a long time before. Okay, 78 weeks to be exact, before the market bottomed the week of September 30th, 2002. 78 weeks before the market bottomed. Okay, so keep that number 78 in mind. It'll come back. So this 886 will come back. The distance between the top to the bottom, 886. And same way with today. The distance between the top 469 and 829 is 1298. Okay, why did I take this one and not that one up there? I'm actually being a little bit conservative by taking this peak. and not this one. Okay, if I if I took this peak up here, that number would be a lot bigger, and our timeline would go way past August of 2024. Okay, so I was actually more conservative because I believe that it was that Black Friday of last year. We were coming up. This is the month a year ago, right? Black Friday, the day after Thanksgiving. That Black Friday proved to be very consequential when you look back. While the markets did continue to rally higher into December, remember we had a little Santa Claus rally? The MACD did not. The MACD on the NASDAQ peaked that Black Friday, the week of that week. And that's what you're looking at right here because it just cratered since then, right? Even though the markets did kind of inch up for the next couple of months, the MACD did not follow it. Okay, so the difference between top to bottom is 1298. So the question is, when will the markets bottom today? Based off of, I do think we have found the bottom of the MACD actually for the markets, negative 829. I do think so. I could be wrong though. This could curl down and go even further. And if that's the case, my August 5th, 2024 estimate is low. We're gonna go out to 2025. Okay, so um, all in all, I think we are on the path of the lost decade. I really think so. I think there's a big reset coming. How far down we go, we're gonna find out. Okay, so solve for X on the MACD. How long it takes the MACD to get back to the zero line is essentially where the market bottom will be, okay? Because back or near the zero line, here's the MACD bottom on the dot-com bubble. 78 weeks for the market to bottom. This is near the zero line. It got really close, but it failed. It got closer than that, but it failed. So that is the question. It took 78 weeks for the dot-com between the MACD bottom and the market bottom. That's the X we need to solve for. How many weeks is it going to take? If you assume that this negative 829, if you assume that is the MACD bottom, because we know the top, we know the bottom. We know the top, we know the bottom on the dot-com. And we also know for the dot-com, the MACD bottom to the market bottom. That's where you would solve for X. 78 weeks on the dot-com divided by the total distance between peak to trough equals X divided by the total distance between peak to trough. If you assume, so remember 1298 right here, 1298 is the absolute value between 469 and 829. Okay? If you assume this is the bottom. If it's not, well, longer we go. Okay, solve for X. We all remember algebra. X equals 114 weeks. X equals 12.28.6 months. X equals 2.4 years, which puts you out to 8/5/2024. Again, it also assumes the Fed doesn't step in and start turning the money printers back on and reenacting quantitative easing. Okay, it assumes that too. The reason why I chose the dot-com is because the Fed didn't step in to do quantitative easing. The Fed didn't save all those companies. There were no banks to save. They just let those companies let the weak hands get filtered out. And what was left, right? And what was left was the bottom on September 30th, 2000, And two, you guys remember Amazon actually lost like over 90% of its share price in the dot-com bubble. So quite astonishing. The Fed just let the market forces, um, let nature take its course. Okay. So I hesitated to use the 2008 financial crisis, and I'll show you why I hesitated on NASDAQ. Here we go. Let me show you why I didn't want to use them. I mean, you saw earlier when I drew out the just the V-neck. Here, let me do this. Here we go. Yeah, 2008. Let me zoom out a little bit. See that? I hesitated because that was the birth of QE, and the Fed is reversing that now. So you can't really compare. I mean, had the Fed not stepped in, oh boy. You guys remember at the time, even at the time, they're like, this is going to be the next Great Depression. George Bush went on national television, right? And he said, we are on the verge of the biggest recession since the Great Depression. Remember George Bush said that on TV? Actually, he was right. When you look at the MACD, we are going down. So the Fed stepped in and just pumped it back up artificially. See that? There is no question. So I didn't want to use that because this is an artificial recovery, guys, right? Artificial recovery. So you're telling me, 98, 2008. So starting from what, 1994, right? Oh 04. So for 15 years prior to oh 08, 15 years prior to oh 08, it, how can I say this? The economy was actually masqueraded. We were going down. Look at that. There's no denying that. We were going down, you know. And so I didn't want to use the oh 08. That's the bottom line. Um, that's an artificial recovery right here. This is a V-shaped recovery. That was totally artificial. Banks were bailed out. Um, all the fat cats on Wall Street, the banks, they all got their bonuses. You guys remember all that reporting, right? Oh, people were angry, angry. Like, wait a second, wait a second. So they caused the great financial crisis by all these credit default swaps. You guys watched the Big Short? Oh, that was a fantastic movie. So they caused the great financial crisis, and not only did you bail them out, the government, they actually got bonuses from that. So, anyways, I'm not going to get into that. So there you have it. That's my thesis. We are nowhere near the bottom, and we are going to keep falling. Okay. So I guess one more point. I do believe. Let me show you. Yes, let me show you. Let me switch over to the weekly view. You guys remember? Let me go ahead and clear out all these drawings. Oops. Get a little bit too. No, I want to go to 2008. Here we go. Clear that out. I want to make a final point before I conclude this video. When did Lehman Brothers file for bankruptcy? September 15, 2008. Okay? You guys are old enough to remember that? That was when the news outlets told us about it, right? Mid-September 2008. So, mid-September 2000. Here we go. Right here. I'm highlighting it right now. Okay? Mid-September right here, 2008. Then as you see, here's the big giant waterfall. Let me just there, drew a red line right there. That's mid-September. And then we all know the waterfall, right? Look what the MACD was doing before September. This is the weekly chart. I contend to you guys that the big money, the fat cats, Wall Street, already knew what was coming. They already knew what was coming. Notice this MACD line didn't even bother trying to come back up to touch this trend line that was already going down. You know, it was kind of grinding down, grinding down, grinding down, grinding down, but they weren't telling the public. Here we go. You know, it's kind of like, well, it is kind of going down. Maybe it's just a dip. Everyone's still buying the dip, buying the dip, buying the dip. But all the while in the back, behind the scenes, the MACD is cratering. Look at that. It's cratering. Okay? But the media wasn't saying anything. The big money, smart money, fat cats, right? So I believe that the MACD especially relative to the zero line here, look at how far it was already below, right? So if you're trading back then and you were noticing this trend, you're like, oh, I'm not getting any calls. We're going lower and lower and lower. Why would you get calls? And so, you know, that I believe that the MACD, that's why I keep harping on it, firmly tells you, secretly tells you what the market is doing before news comes out. Okay, before the news comes out, the smart money is already positioning themselves behind the scenes for something big coming. And um, like for example, right here, see that? Look at that. Oops. Yeah, here we go. That's bullish divergence. That's bullish divergence, guys. And that was the bottom of the 2008 GFC. That's when the banks were bailed out. That's when Congress passed that. I can't remember how much the amount was. Whatever. That was it. But the markets already knew it. It was coming. And I would contend weeks before then. Yeah, weeks before. That's bullish divergence here. Right there. Okay? So that is what I've got for you guys today. Let me know what you think. You know, let me know if you guys see something differently. Um, a different bottom, a different date, the way we're gonna bottom, you know. So I'm open to suggestions. I'm open-minded. Okay, guys, we'll talk to you later.